In today's video, we're going to discuss 5 dangers of Yieldmax fund investing and how I avoid them. So we earn over $100,000 per year in dividends at this channel, and my performance and value shows that I'm up 37% for the year, 37%. The S&P is up 15, the Dow is up 4, and the Nasdaq's up 30%. So we're beating all the indexes on a year-to-date basis, living financially free out of our brokerage accounts at this channel. Also on Friday, I was up 0.46, which is pretty good performance. If you would like to experience similar results in performance and need help living financially free out of your brokerage account, email me for my e-guides at aikentodd48@gmail.com. When you buy my e-guides, you get access to Discord for free and all the channels within it. You also get my phone number to call me anytime you need me. This is the real benefit of buying my e-guides, in my opinion. If you are wanting separate access to Discord alone, I'll link that in the description below. So let's go ahead and get right into the dangers of Yieldmax fund investing, okay? The first danger is the fluctuating dividends, all right? I remember being in TSLY when this first came out, when TSLY, first launched, and the dividends were going all over the place. First, it was 60%, then it got cut after the weak earnings announcement from Tesla, and then we raised the dividend again when Tesla saw its volatility improve. So as volatility goes, so do these dividends for Yieldmax fund investing. If dividends fall, that's because the volatility fell and the stock price fell. All right, so that's one thing you have to keep in mind for Yieldmax fund investing is when you're looking at your estimated income and you're trying to calculate your bills and how to budget properly out of your brokerage account, like I do. All my bills come out of my E-Trade account. Well, I have to know what my dividends will be for the next month. And that's why I like Cornerstone. I'm not going to get too much into Cornerstone right this second, but Cornerstone is my largest holding in my account. It's 500 grand that I have in Cornerstone. All right, that's because the 21% dividend it pays is set for the year. So I like the stability of Cornerstone. You've heard me say that I anchor my portfolio to Cornerstone many times. You can choose a JEPI or a Schwab D, but those don't have big enough dividends. Schwab D is quarterly. JEPI has its dividends fluctuate. It's also too small of a dividend, JEPI, once again. So that's why I like Cornerstone. I anchor all of my portfolio to Cornerstone. Cornerstone is my portfolio. I have 500 grand in it. Once again, that is my account size, 500 grand. And I just use this purchasing power. For every $1 you put in your account, you get $4 of purchasing power, which you guys know that's the big theme of my channel. I have about $1 million in purchasing power. So I just used a fraction of that to buy the rest of these funds, including the Yieldmax funds. Okay, this is my debt right now, $250,000. I don't mind having this on. I can click sell at any time. It's not risky because my dividends pay back my debt in less than 2 years. It doesn't show up on a credit check. Also, my dividends that I use extra leverage here for the dividends and performance that acts as qualifying income to banks for loans. So that's how I really level up my account and live financially free out of my brokerage account, okay? I just let the dividends pay back all of my margin. All my bills come out of here. I can swipe my E-Trade debit and checking card wherever I want, however I want to spend. I can buy cars, clothes, shoes. I can travel. I can buy a house. You can do anything you want with the debt and a brokerage account with the leverage afforded to you. I choose this debt because it's cheaper than credit cards. It's cheaper than a mortgage. So for many reasons, I choose to use margin to live financially free out of my brokerage account. I just use a fraction of margin once again. And that's why you can't be buying too much of these Yieldmax funds because, well, if you're on margin, especially because you're going to see wild fluctuations in your account price-wise and dividend-wise. Okay, so let's go ahead and get into the second danger of Yieldmax fund investing, and that is headline risk, okay? Headline risk. TSLY, as we know, we already went through an example of TSLY. It can have a bad earnings day and it falls by 10%. But if you're in the indexes like I'm in the indexes, like with Cornerstone and JEPI and Devo and Schwab D, then you won't see those kinds of fluctuations in your account, okay? There's no headline risk in an ETF diversified with a basket of stocks. All right, CRF and CLM. CRF is the Nasdaq. CLM is the S&P for me. And really quickly, just so we can get this out of the way, Cornerstone is a 5-star fund. See, 5-star fund, and it has a 21% dividend. Again, that's dripped at the NAV. You guys know this if you've seen my past videos, but for all you newcomers here at the channel, see Cornerstone, you have an $8 market price here, and then you have the $6 NAV price below. You see the 663 right there? That is a 20% gain. 652, 23% gain. 685, 17, 642, 25% gain. Okay, 627, 28% gain. So people ask, do I reinvest my dividends from Yieldmax? No, because there's no advantage to reinvesting my dividends with Yieldmax, but I reinvest them with Cornerstone. Okay, I should have put that as another risk to Yieldmax fund investing. Like there's no advantage for dripping, but that's not really a risk. Okay, that's just how most funds work. They don't have this discount program where they drip at the NAV like Cornerstone does, okay? Cornerstone, you just have to learn how to play it, okay? Cornerstone, you have to ask for the special drip and you have to time it around its rights offerings. But luckily, we have a channel here in Discord for that rights offering announcement. When Cornerstone announces its rights offering, like many closed-end funds do, most of them have rights offerings that drop the stock precipitously each year. You have to sell out before the rights offering announcement and buy back after. This is how you reset your yield, and you get 50% gains out of Cornerstone each year because you get a 20% dividend in Cornerstone, and you get the 30% premium. It averages to NAV. Okay, so 50% gains you get in Cornerstone every year at least. Some years I get 70% because the premiums run up to 50% plus in Cornerstone. But then the rights offering drops the stock. Okay, that's how you see the stock going down over time. And you keep asking me questions. Why does Cornerstone go down? Why is it my favorite fund, but it's going down obviously over time? Why would Todd pick that? Do you think I'm stupid enough to pick a fund that drops in price like that? With the money that I have in my account and the performance that I get out of my brokerage, do you really think I'm going to jeopardize that with something like Cornerstone that drops like a rock when you look at its chart? Of course it goes down over time when you look at its chart. Same for most of these funds. They all decay and have NAV erosion of some kind. You have to learn how they work. Okay, Cornerstone gives you its dividend out of its shares, out of its return of capital. Okay, so yes, you're getting your own money returned to you in Cornerstone, but that's how many funds work. Okay, as long as the NAV is rising, then it's good return of capital, and return of capital means it's tax-free. So you see how the NAV is rising in Cornerstone? Obviously, it's not going down over time, guys. You have to factor in the drips, factor in the dividends, and factor in the rights offerings, and you sell those, you take the premiums, those large premiums you get, you sell before the rights offering, you buy back after. That's how you really play Cornerstone, and it can really become an amazing wealth generator if you understand how to play this fund right. And again, that's in Discord. If you need any help with Cornerstone, we have a rights offering channel. We also have a channel on who does the best drips for Cornerstone. So we have this drip channel here, and because not all brokerage accounts do the special drip for Cornerstone, okay? We also have an all things margin related tab, a Yieldmax channel down here, et cetera, okay? So be aware of headline risk in the Yieldmax funds. Be aware of these fluctuating dividends, and just understand that yes, the prices will fall in, let's say, a Cornerstone and Yieldmax, but you really have to learn how to play them right. Okay, Cornerstone timing around its rights offering, and for Yieldmax funds, we're going to get into that in 1 second, how to offset that NAV erosion. Okay, the third risk to Yieldmax fund investing is the high maintenance. Okay, we've talked about this on many videos in the past. Okay, look at the maintenance of, let's say, APLY. All right, so if we go into APLY and we click trade, look at the margin maintenance requirement. Okay, 50%. That's a problem. 50%. Okay, that means for every $100,000 I put in APLY, 50,000 of my money is taken up, and this is a problem when you're trying to live financially free out of your brokerage account, even when you're not using margin. And I'll explain that in 1 second. Look at CLM. If we type in the ticker symbol of CLM, look at its margin maintenance requirement. It is 30%. So it's almost half the maintenance requirement of Apple, and it has this 18% dividend, but really it's 21%. When you drip it at NAV, it drips it at 21% each month. So that's the special advantage of Cornerstone. It's kind of like its own Yieldmax fund. It has a really high dividend like Yieldmax. In 5 years, it pays you back. You don't care what the price does, actually. Even if you don't time the rights offering, 20% dividend times 5 years is 100% payback. But Cornerstone is, again, like a mini Yieldmax fund, except the dividends don't fluctuate and there's no headline risk and there's low maintenance. So that's why I'm anchoring my portfolio to Cornerstone at all times. And you saw that maintenance in Apple, that's a problem, okay? So even if, again, you're not using margin to live financially free out of your brokerage account like me, many people say, well, I don't have to worry about maintenance, Todd, because I don't use margin. But you do have to worry about maintenance, because if you're not using margin, you still want to withdraw out of your account, don't you? If you're in all 100% maintenance names, okay, you're going to have zero available for withdrawal. When you get to zero in margin, when you're using margin like me, then you get into a margin call. So luckily I have a lot of cushion between me and a margin call. The market would have to fall 20% for me to even get close to a margin call. And guess what? That wouldn't even happen because a 20% drop in the market means we break even. Why? Because 20% dividends from Cornerstone break us even. All right. You can't promise that with Yieldmax funds. The dividends could fluctuate, but if my account drops 20%, my whole account is in Cornerstone, as you can see. So I break even and I don't even lose 20%. I just break even for the year. So that's how I'm really getting ahead using margin. But if you don't use margin, okay, you still have to watch this number because when it gets to zero, no, you're not in a margin call, but you can't withdraw anything out of your account. Okay, maybe you don't want to invest on margin, but you might want to withdraw things out of your account on margin like many people do, since again, the interest is lower to use margin than a credit card is. So keep this in mind, keep high maintenance in mind, okay, with Yieldmax. Now, some brokers have it lower than me. Some brokers have it at 25% or 15% maintenance. IBKR and Robinhood have really low maintenance for Yieldmax funds, and that could be something special that you guys want to explore because I have outperformed in Cornerstone without the drip in 2021. So IBKR doesn't have the Cornerstone drip, and either does Robinhood. They don't really support Cornerstone, and people ask me, why is that? Because I don't think they're as comprehensive of brokerage platforms as, let's say, an E-Trade or a Charles Schwab is. But you still may want to explore these avenues because you get much lower maintenance at IBKR or Robinhood, which could go a lot further for you when you're trying to live financially free out of your brokerage account. Maintenance is everything. Low maintenance unlocks equity and makes your equity rise. Not necessarily your market value, okay, which is 459 for me. I don't care about that number. I care about the equity, all right? The equity is what I can get more margin off of. I can go ×4 off this equity for every $1 you get in your account. Again, you get $4 of purchasing power. So I like the purchasing power I get off my equity, and I like the high cushion that I get from my equity, which allows me to withstand margin calls. And even if you're not in margin, allows me to withdraw freely from my account with. Okay, the fourth danger of Yieldmax investing is NAV erosion. We kind of alluded to this earlier. Okay, many of these funds go down in price over time. If you're to go look at a chart of TSLY, all right, you'll see that it's going sideways here, looking like it's basically at a low on its range, okay? So let's go into the chart. See how it's at a low, low, low? Well, if you go to a chart of TSLY, you'll see that it's making higher highs and higher lows. So we're seeing the same lows from 2023 in TSLY, May, and now August, okay? So that looks kind of constructive on a chart. Yes, it's RSI is oversold. The MACD is crossing. I really like TSLY right here, by the way, guys. I'm probably going to add to this on Monday because look at this setup on TSLY. I'm not going on a tangent. This is all apropos. So look at this. We're coiling on the 200-day moving average. We popped above it, and we're coiling now between the 200 and that purple line, which is the 100-day moving average. So TSLY is looking very constructive here, but it's making higher highs and higher lows. Do you see that? From 2023, we're at a low here, but a higher high in May and a higher low in May and a higher low in August. Whereas TSLY was at the same lows from all times of the year, okay? TSLY was at a triple bottom, essentially, which kind of helps build the picture better for TSLY. Triple bottom, and TSLY was consolidating on that 200-day moving average, like I said. So this is looking really constructive, by the way, guys. TSLY, you probably want to add to these shares when you get a chance. All right, but the NAV erosion is real. So you saw how TSLY's NAV erosion is real. How do we offset that NAV erosion? Well, one thing you can do is you can buy TSLY stock. Okay, you can buy TSLY for the dividends, and you can buy TSLY stock. But I don't like buying stock, as you guys know, because especially when the stock doesn't pay a dividend, because if the stock doesn't pay a dividend, then it's just charging me margin interest for no reason, okay? And also stocks add to my margin, right? So if I'm buying a stock, it's going to add to my margin, right? And that's going to add to my margin interest, okay? But if I sell the option on TSLY, which I have done before, you can go look at my past videos on selling options on TSLY, you then lower your margin. So I sold an option on TSLY for $800 once, and I lowered my margin by $800. But I was controlling TSLY at the same time, okay? This is my sold options section, as you can see here. All these little blue highlighted tabs. These are all options that I sell. I've probably collected about $30,000 in premiums off of these options. I usually do about $50,000 a year in premiums, which acts as another form of income at my channel. I get three forms of income at the channel. I get dividends, which are over $100,000 per year. I get options income, which is between 30 and 50 grand per year. And then I also get capital gains. Since I'm tying my investments to all the indexes, the S&P averages 7% per year over time, as you know, 10% if you want to count inflation. So let's just do my account size, 500,000 plus my 200,000 in debt. Let's just call it 700,000. 700,000 times 10%, what is that? 70,000. So I get 70,000 of cap gains to withdraw from each year. Okay, that's how I'm also not worrying about paying my margin debt down, because the market's had a huge run this year. I'm up, over 30% for the year this year. Okay, so this is giving me 70 times 3. What is that? That's giving me over, I'm sorry to say, it sounds kind of strange, but it's giving me over $200,000 of money to withdraw from, because capital gains, I'm up 36%. All right, so this is how I'm paying myself. By the way, I always get this question. I pay myself through the 100,000 per year in dividends, the options, which is about 30,000 or so, and then also, of course, the capital gains, which is about 70,000 per year on average. All right, so that's how you offset the NAV erosion for Tesla. You either buy the stock of Tesla or sell puts on it. Me, myself, I already closed that put for a gain in Tesla. So how do I get the rest of exposure on Tesla to offset that NAV erosion for Tesla? How do I get the Tesla exposure? I buy my index funds. Cornerstone has a lot of Tesla in it. And also OARK, okay? OARK has 10% of Tesla in it. So that's how I'm getting more exposure to Tesla, is through OARK. Now, OARK, that has NAV erosion. So where do I get the NAV erosion from there? How do I offset that? Well, I sold puts on ARKK, because OARK follows ARKK. So here we are, ARKK, as you can see here, $9.82. So I received $1,000 for selling this put on ARKK. Also, I received another $1,000 here on ARKK, $10. For selling this put. So I received $2,000 from ARK. I lowered my margin by $2,000, but I'm also getting performance now. If ARK-K moves up and OARK moves up and OARK has NAV erosion, well, my ARK-K puts are going to offset that erosion and give me more capital gains. So that's how I offset NAV erosion in Yieldmax funds. The last danger of Yieldmax fund investing, are you ready for it, is it's unproven. Okay, Yieldmax funds are relatively new and they're unproven in a black swan event. The C's, by contrast, have made it through decades of investing in the stock market, and they made it through, most importantly, the Corona crash and the 2008 crash. They even paid their dividends throughout Corona, I'm pretty sure. I got into Cornerstone right after Corona. So I'm not sure how it worked before Corona, but I heard good things about Cornerstone. Okay, it's a 5-star fund. It's been a high-ranked fund for a long time, and it's been around for decades, and it's made it through these crashes with flying colors. So that's why I also like Cornerstone. But please, guys, don't email me or ask in the comment section below, why am I plugging Cornerstone, or why does Cornerstone fall and look so bad? Why am I investing in it? I've explained to you in this video why Cornerstone is the best investment vehicle on earth. Okay, try to find me a better investment vehicle that also pays you dividends and qualifies to banks for loans, so you can live financially free out of your account. Please find me a better fund, and I will thank you for it, and I will invest in that myself. So I think that will do it for the video, guys. Okay, these are the 5 dangers of Yieldmax fund investing and how to offset them. Okay, if you have any questions on them, email me for my e-guides at aikentod48@gmail.com. Again, when you buy my e-guides, you get free access to Discord, all the channels within it, and you also get my phone number to call me anytime you need me. So if you like the video, click like or subscribe, and I'll talk to you soon. Thanks, guys.